Hello everyone, welcome to the March 27th Friday edition of Market Opening Bell, your 10-minute guide to the stock market. Reports indicate that Iran has rejected the US ceasefire proposal and put forward 5 major conditions for ending the war. Only after all conditions are fully met will Iran engage in talks with the United States. Coupled with the share price declines of certain stocks such as China Life and Kuaishou following the results announcement, this dragged the Hong Kong stock market lower. The Hang Seng Index opened 68 points lower and the decline widened during the session. It once fell 542 points to a low of 24,793 points, eventually closing down 479 points or 1.9% at 24,856 points. The H-share index fell 192 points or 2.2% to close at 8,389 points. The Hang Seng Tech Index dropped 161 points or 3.3% to close at 4,761 points. Total market turnover for the day was 261.6 billion Hong Kong dollars. Southbound trading turnover total 117.155 billion, while southbound funds recorded a net inflow of $3.34 billion. Among them, net buying included Tracker Fund 1.376 billion, CNOOC 1.099 billion, Kuaishou 910 million, Yangtze Optical Fiber and Cable 710 million, Meituan 679 million, Tencent 339 million, and CSOP Hang Seng Tech Index ETF 331 million. Net selling included Alibaba 998 million, SMIC 522 million, and China Mobile 372 million. According to statistics, Southbound funds have net bought Yangtze Optical Fiber and Cable for 4 consecutive days totaling 1.836 billion. They have also net sold SMIC for 9 consecutive days totaling 3.889 billion. Technically, the Hang Seng Index has lost the 25,000 point mark and the 250-day moving average has also been breached again. If it falls further below 24,500 points, it will indicate that the short-term technical rebound has come to an end and the index has a high chance of retesting or even breaking the recent low of 24,203 points. The 3 major A-share indexes fluctuated lower in the morning and saw widened declines in the afternoon. The Shanghai Composite Index closed down 42 points or 1.1% at 3,889 points. The Shenzhen Component Index fell 194 points or 1.4% to 13,606 points. The Chinex Index dropped 44 points or 1.3% to 3,272 points. Combined turnover in Shanghai and Shenzhen markets reached 1,948.4 billion yuan. The renminbi central parity rate against the US dollar was set at 6.89056, down 145 points from the previous day, marking the lowest level since March 16. China Life held its 2025 annual results briefing on Thursday regarding the net profit losses recorded in the 3rd and 4th quarters. President Li Mingguang stated that changes in market value are either reflected in the income statement or the balance sheet. Therefore, fluctuations in net profit and net assets in line with market value changes are normal and regular occurrences. The company's 4th quarter profit being negative essentially reflects the difference between the full year results and the results of the first 3 quarters. The main reason was structural adjustments in the capital market, which caused some of the stocks and funds held by the company to experience pullbacks in the 4th quarter of 2025. He advised investors not to overinterpret single quarter profits, noting that the company's asset liability management requires a cross-cycle and long-cycle approach and that its investments are value investments and long-term investments. China Ping An announced its full year 2025 results, overall operations improved comprehensively, with core indicators showing high growth, demonstrating strong earnings recovery capability. New business value in core businesses recorded significant growth, and dividends have risen for 14 consecutive years. Net profit attributable to shareholders of the parent company, excluding non-recurring items, reached 143.773 billion yuan, up 22.5% year-on-year. The proposed final dividend for 2025 is 1.75 yuan per share in cash. The full-year dividend is 2.7 yuan per share in cash, representing a 5.9% year-on-year increase. The insurance fund's investment portfolio stood at 6.49 trillion yuan, up 13.2% from the beginning of the year. The comprehensive investment yield was 6.3%, the highest in nearly 5 years, rising 0.5 percentage points year-on-year. New business value for life and health insurance businesses reached 36.897 billion yuan, up 29.3% year-on-year, achieving double-digit growth for 3 consecutive years. New business value from the agency channel grew 10.4% year-on-year, with per agent new business value up 17.2%. New business value from the bank assurance channel surged 138% year-on-year. Property and casualty insurance operations showed dual excellence in quality and efficiency. Original insurance premium income for 2025 grew 6.6% year-on-year, while insurance service income increased 3.3%. The overall combined ratio was 96.8%, an improvement of 1.5 percentage points year-on-year, the best in nearly 5 years. China Property and Casualty Insurance released its 2025 annual results, benefiting from a doubling of underwriting profit and steady growth in investment income. The group's net profit grew significantly. Original insurance premium income for the year reached 555.777 billion yuan, up 3.3% year-on-year. Net profit was 40.37 billion yuan, up 25.5%. with earnings per share of 1.815 yuan. A final dividend of 0.44 Hong Kong dollars per share was declared. Together with the interim dividend, the full-year dividend totals 0.68 Hong Kong dollars per share. Total investment income for the year was 38.639 billion yuan, up 12.8%, with a total investment yield of 5.8%, rising 0.1 percentage point. Underwriting profit for the full year reached 12.535 billion yuan, up 119.4%. The combined ratio was 97.5%, down 1.3 percentage points. China Mobile announced its results for last year. Operating revenue reached approximately 1.0502 trillion yuan, up 0.9% year-on-year, within market expectations of 1.0416 trillion to 1.0653 trillion yuan. Main business revenue was 895.5 billion yuan, up 0.7% year-on-year. Among this, computing power services revenue was 89.8 billion yuan, up 11.1% year-on-year. Communication services revenue was 714.9 billion yuan, down 1% year-on-year. Net profit was 137.095 billion yuan, down 0.9% year-on-year, close to the lower end of the forecast range of 136.1 billion to 145.3 billion. Basic earnings per share were 6.35 yuan. The company declared the final dividend of 2.52 Hong Kong dollars per share. The full-year dividend total $5.27 per share, up 3.5% year-on-year, slightly above the forecast range of 4.68 to 5.01. The full-year payout ratio was 75%. Management expects the payout ratio to rise steadily this year. Capital expenditure for this year is forecast at 136.6 billion yuan, down 9.5% year-on-year. Among the three major networks, computing power network and intelligent network investments account for over 37%. The group's operational performance target is to achieve steady revenue growth and synchronized profit growth on a comparable basis. In its results report, China Mobile stated that looking ahead, adjustments to the VAT policy on telecommunication services will have some impact, and the company also faces certain uncertainties in its development. Meituan released its fourth quarter and full year 2025 results. Full year revenue reached 364.9 billion yuan, up 8% year-on-year. Affected by inflation-style competition in the instant retail industry, Meituan swung from profit to loss, recording a full-year net loss of 23.4 billion yuan and an operating loss of 17 billion yuan. The core local commerce segment recorded revenue growth of 4.2% year-on-year to 260.8 billion yuan, but posted an operating loss of 6.9 billion yuan, compared with a profit of 52.4 billion yuan in the same period last year. The main reason was increased marketing subsidies to cope with fierce competition and enhance user stickiness. Nevertheless, the food delivery business maintained over 60% GTV market share and continued to lead in the mid to high price order segment. New business revenue grew 19.1% year-on-year to 104 billion yuan, with the operating loss widening to 10.1 billion yuan, mainly due to increased investment in overseas businesses such as Kita, partially offset by the closure of Meituan, Youxuan, and improved efficiency in grocery retail. R&D expenditure hit a record high, rising 23% year-on-year to 26 billion yuan. Management stated during the earnings call that they expect the per-order loss in catering food delivery to continue improving in the first quarter of 2026, with the loss reduction trend set to persist. Hua Hong Semiconductor announced its 2025 annual results despite ongoing price pressure and depreciation burdens in the global semiconductor market. The group's revenue still recorded steady growth, and capacity utilization remained in an overload state. The average capacity utilization rate for 8-inch and 12-inch production lines reached as high as 106.1% for the full year, indicating that domestic substitution and AI-related demand remained strong. Revenue for the year was $2.402 billion, up 19.9% year-on-year, mainly driven by increased wafer shipments. Net profit was $54.88 million, down 5.6%, primarily due to higher depreciation costs from new plant operations, partially offset by higher selling prices and cost optimization measures. Earnings per share were $0.032. No final dividend was declared. Gross profit for the year was $283 million, up 37.9%, mainly benefiting from higher average selling prices and cost reduction measures, partially offset by increased depreciation. Gross margin improved from 10.2% the previous year to 11.8%. The Wuxi Phase 2 project is ramping up capacity rapidly, and with 8-inch wafer foundry prices recovering, with some increases reaching 20%. The company's profit margins are expected to be further released in 2026. Iran rejected the U.S. ceasefire plan and instead proposed 5 major demands. Trump threatened to escalate the conflict, causing oil prices to continue rising. U.S. stocks saw widened declines on Thursday. The fear gauge VIX index rose 2.1 points, or 8.3% to 27.44 points. The Dow Jones Industrial Average closed down 469 points, or 1% at 45,960 points. The Nasdaq plunged 521 points or 2.4% to 21,408 points, having fallen 10% from its earlier high and entered correction territory. The S&P 500 index closed down 114 points or 1.7% at 6,477 points. The Nasdaq China Golden Dragon Index, which reflects the performance of Chinese concept stocks, fell 175 points or 2.55% to close at 6,721 points. Trump later stated that negotiations are progressing smoothly, and at the request of the Iranian government, the US side will extend the suspension of attacks on Iranian energy facilities by 10 days until April 6. On the US stock news front, a Los Angeles court ruled that Meta and YouTube were negligent in social media addiction cases and must pay compensation. Meta shares fell 8%, while Alphabet dropped 3.1%. Separately, Meta announced that the investment in its artificial intelligence data center in El Paso, Texas, will be expanded from the original $1.5 billion to $10 billion with the goal of reaching 1 gigawatt of computing power by 2028. Chip stocks fell sharply, with Micron and AMD both dropping 7%, Intel falling 6.5% and Nvidia declining 4.2%. Amazon and Microsoft both fell more than 1%, while Apple remained stable. In terms of economic data for the week ended March 21st, the seasonally adjusted number of initial U.S. unemployment claims rose by 5,000 to 210,000, in line with market expectations, indicating that the labor market remains stable. Our stock pick today is 361 degrees, stock code 1361. 361 degrees adheres to the brand positioning of professionalization, youthfulness, and internationalization, and is committed to providing high-value, multi-category professional sports products. The 361 degrees brand focuses on the professional functionality of its products with a deep emphasis on core categories such as running, basketball, and sports lifestyle. It comprehensively covers the increasingly diversified demands of the mass sports consumer group. The 361 degrees children's brand continues the professional sports gene, positioning itself as the youth sports expert, leveraging professional functionality, healthy technology, and child-friendly fashionable design. It creates differentiated competitive advantages and meets the comprehensive sports equipment needs of children and adolescents. For the year ended December 31st, 2025, the group achieved revenue of 11.146 billion yuan, representing a 10.6% increase compared to 2024. Profits attributable to shareholders was 1.309 billion yuan, up 14%. Basic earnings per share were 0.633 yuan. The board recommends a final dividend of 0.113 Hong Kong dollars per share, together with the interim dividend of 0.204 Hong Kong dollars per share. The total dividend for the year is 0.317 Hong Kong dollars per share. The payout ratio remains at 45%, and the current dividend yield exceeds 5%. As of December 31st, 2025, the 361 degrees brand had 5,394 core stores in mainland China, with an average store size of 165 square meters, an increase of 16 square meters compared to 2024. The proportion of stores in shopping malls and department stores continue to rise. By region, approximately 76.1% of the stores are located in China's third-tier and below cities, while 5.2% and 18.7% of the stores are located in first-tier and second-tier cities, respectively. The physical layout of the Finnish outdoor sports brand One Way in the Greater China market has begun to show results, with successful expansion to 6 stores. In the international market, the group has accelerated its global layout, owning a total of 1,253 offline sales outlets in the Americas, Europe, and the Belt and Road regions. At the same time, is actively building integrated and full category immersive experience 361-degree superstores. As of December 31st, 2025, a total of 127 361-degree superstores have been established, of which 21 are children's superstores. Facing increasingly diversified consumer demands, the group is actively deepening its presence in high-potential niche segments, expanding its diverse consumer base and extending the boundaries of its brand services. The group places high importance on the growth vitality of the women's sports market and then has launched the upgraded New Skin series of yoga wear and the New Move series of training equipment, while also introducing its first tennis series products. At the same time, by opening the first 361 degrees women's sports concept store and creating offline experience scenes such as the softest strengths themed yoga energy field, the group continues to deepen the emotional connection with female consumers and builds growth momentum for future multi-category synergistic development. Recommendation: buy at 5.7 Hong Kong dollars. Target price $6.3. Stop loss at $5.4. I do not hold the above stock.